Of course, we can't ignore the geographical advantage the region has too. Sitting comfortably in the middle of the globe and literally bridging east to west, very few other locations in the world can offer that sort of reach. So you start your day talking to business partners in Asia and end it with those in the Americas, and the infrastructure, the aviation hub, the state-of-the-art financial centers and free trade zones, the legal system, particularly in the ADGM and the IFC, offers a familiar legal system to those companies looking to set up in the Middle East. We've been seeing the venture capital ecosystem grow considerably in the past 7 years. Although they're experiencing their first downward cycle, investors are getting the jitters and are focusing more on due diligence and how soon a company will be profitable. But even despite that, last year we saw about $3 billion in venture financing across the Middle East, with the UAE alone receiving $1.2 billion from international investors. We've also seen an influx of high net worth individuals and hedge fund managers relocating to the UAE post-pandemic, as it became an attractive alternative to the major cities, particularly in the way they handled the lockdowns and kept its effect on business to a minimum. That hasn't gone unnoticed by many investors and fund managers who realized the benefits of not just the business-friendly atmosphere, but also the lifestyle the UAE had to offer. And as a result, many family offices have been set up looking to diversify their portfolios with allocations across bonds, real estate, alternative investments, etc. Of course, this is not limited to just the UAE and Saudi Arabia. We're seeing positive initiatives across the Middle East in terms of attracting global fund managers and foreign investment. Besides being a business-friendly environment and infrastructure, the Middle East is home to a vast amount of capital that's attracted alternative investment managers for years. Although they have traditionally preferred public markets to private, we're seeing a shift, particularly within the large family offices, with the inclusion and eventual takeover of the next generation. They're looking for a higher level of diversification and have a much larger appetite to alternative investments than their predecessors. This opens up a larger pool of investors than what was available in the past. We've also started to see sovereign wealth funds starting to shift their investment mandates from ex-Middle East and have started investing more in regional startups as well. Apart from local investors, we've seen an influx of international names setting up shop in the Middle East. So from large asset services like Citco, State Street, Northern Trust, to Brevin Howard Asset Management, and Ray Dalio setting up a branch of his family office in ADGM. So having boots on the ground allows these companies to be closer to their investors and helps them foster existing relationships and build new ones. So the importance of the region in terms of an investment pool is undeniable. Having a local presence also helps them understand their investors and their risk appetites.